Hi everyone and welcome back to my Forex channel. So in this session I will share one more scalping strategy using 1 minute time frame and only 2 indicators. In this 1 minute scalping strategy we will focus on a fast trades to capitalize quick profits, and this strategy is just simply amazing because it's simple and easy to follow and anybody can adapt to, whether they are experienced Forex traders or maybe you have a less experience but you're looking for strategies to basically renew your Forex journey. I will definitely show you how to set up everything in regards to your charts and tools that we will use to help us out, and it will be a lot of information about this strategy so you can make notes if you really need to. And as you know me, any questions in regards to this video or you just want to say hi, just reach out to me on my social media and I will leave all the information in the description down below. So before you will jump into applying this strategy and placing the trades, make sure you are on 1 minute time frame, alright? Because there have been some times for me that I went to apply this strategy and I see, oh damn, I'm not in the right time frame. So just make sure you on 1 minute time frame for this specific scalping strategy. And for this strategy we will use 2 different indicators for our confirmations to enter a trade. So we will be using exponential moving average of 200 and we will use a stochastic. So as you can see, mine one's already on, but for you all you have to do is just go on indicators and type in EMA or exponential moving average, it doesn't matter, and it will be the first one. So just add it on. So default settings for EMA comes into 9, but all you have to do is just to press on this button and change into 200. So once you're done with your exponential moving average indicator, you also have to add a stochastic. All you have to do is just go on indicators and type in STO. It will be the first one, and default settings comes into 14.3, but you have to change to number 5 instead of 14. The reason why we are changing the settings from the defaults to the ones that we have already is because this is going to group an overbought and oversold zones of the stochastics, which means more trading opportunities to take. So once you applied all the indicators correctly, the actual strategy is like 2 plus 2. The first step is of course to identify a trend, because as you know, the trend that you're in is going to determine what types of trades you will be looking for. The best and easiest way to do it is to basically use our 200 exponential moving average indicator, and the rule for it is very simple. So if the candles is above of 200 moving averages, it means we are in a buyer's market in an uptrend. Vice versa, if the candlesticks below 200 exponential moving averages, it means we are in a seller's market and we will be looking only for a sell trades. So as you can see in this example, we are in an uptrend because the candlesticks is above of our 200 exponential moving average, and let's say if the candlesticks is below of our 200 exponential moving averages, means we are in a downtrend and we will be looking only for a sell trades. And I'm always telling this golden rule to my subscribers that always go with the trend, because the trend is our friend. Now, as we just talked about the exponential moving averages, let me just tell you how the stochastics indicator will help us. So the stochastics is basically for telling us where to enter those trades, and the key principle of the indicator is that whenever you have a crossover on the top of the area, it's a overbought market and we will be looking for a sell trades. On the other hand, if we have a crossovers on a lower area, we will be looking for a buy trades because it's oversold zone. So this is super important for you to understand how this tool works in the Forex trading. So your second step is to look for a stochastics crossover, and this is super important, but in addition into crossovers, you want to look for a momentum. So when you see a crossovers happening in the stochastics, you don't want to only look for the blue and orange lines, going up or down. So let's say over here we have a crossover based on blue line crossing an orange one, but then they both starting heading towards the upside. So that upside movement and crossover is the momentum that we are looking for to enter a trade. And let's say this is example for a sell trade. So as you can see, the stochastics moving average is crossed on the top of the zone, indicating an overbought market, but we are waiting for that crossover of moving averages to start heading towards the downside, and that movement is what we are looking for to enter a sell trade. So once you listen to the Kristina's teaching lesson, let's go and I will show you how effective this strategy works. So here we have a Euro USD on 1 minute time frame, and we are in a buyer's market because the candlesticks is above of 200 exponential moving averages, and we will be looking for a buy trades only based on crossovers in the lower zone of the stochastics indicator. So I marked it with a yellow line so it will be easier for you to not look anywhere else but just in that crossover. So as you can see, we have a stochastic crossover and the momentum towards the upside, so this is where we're entering a buy trade, and we also see a green light from the buyers as well by showing a bullish engulfing candle. So of course our entry point will be the bullish engulfing candle closed, and we would be entering on a long. So as you see, we are entering a trade on a bullish engulfing candle. In regards to your stop loss, the stop loss zone should be in the recent area of a broken support and resistance. So as you can see, even by applying two different indicators and following the correct steps, we would be profiting in around of 19 pips. Of course, you would be possibly keep the trade until over here because this is the zone where you will have to close your trade and look for new opportunities. Look into your stochastic for a crossover for a confirmation to enter your trade. So take a look for a sell example as well on your USD 1 minute time frame. As you can see, a crossover of stochastic occurred on the top zone indicating an overbought market, and our candlesticks is below of 200 exponential moving averages. So what it means, we are looking for a sell trade. So as well, I marked the zone with the crossover where it happened with the yellow line. As well, we have a bearish engulfing candle. It means we are going down because we have a confirmation from a seller market. So as you see, I marked the zone where the stochastic crossover happened, and we have a bearish engulfing candle. We are going down. Don't forget to put your stop loss zone in a recent horizontal area of sensitivity, so it's either support or resistance, and as you can see, we will be profiting 59 pips in total. And as you see guys, if you wait for those opportunity moments to enter the trade and you follow the criteria of the strategy, this strategy can pay off very well. So if you enjoyed this video, smash the like button and comment down below, and once again, thank you for watching me, and until next time, bye.